Okay, everybody, here we go. It's me, Gregory Mannarino, Monday, November 11th, 2024. It is Veterans Day. I want to wish everyone a happy Veterans Day, especially those of us who have served. I love all of you, and I mean that with all I got. So, if you know a veteran, make sure you go out and thank him or her for their service, or a current service person as well. All right, people, look, man, we got to move forward. I want all of you to understand something. We are in a very, I almost want to say euphoric time in this market. It's going to lead to much greater distortions with regard to the price action of assets across the board. Now, that presents a problem. As a matter of fact, I would say we need to be even more diligent and understand the dynamics in play, what it means for the now and moving forward. There's always a cause and effect in anything you want to do in life. So I want you to think about that. The current environment here, pretty easy to predict how this would play out here with regard to Trump's second term. And again, it does seem too easy. And I've been telling all of you that for quite a while. Okay, we need to understand something, and that's really what I want to talk about. There is absolutely a danger factor here. Now let's talk about that just real quick. Let's start off with this. So most of you probably know this, especially those of us who are crypto enthusiasts here. Bitcoin has now topped 82,000. And people, I'm going to tell you right here and right now, yet again, it's going much, much higher. The entire crypto space, I just don't know another way to put it. Now, keep this in mind. As a matter of fact, just real quick, I got a screenshot for you. Bitcoin is now 82,371. That's going to waver around, obviously. Now, stock futures, higher across the board. What this means is right at the open, you're going to see new record highs for the major indexes. Imagine our shock. Let us move forward. Now, here's something that I know, I explained this to you. I've been covering this as of late. I explained it to you yesterday. I want to talk a little bit more about this because I got a lot of questions regarding what's happening here. So commodities under pressure. People, you have to understand market dynamics at its most fundamental level. When you have an environment as we have now, you're going to see certain things happen. It's just, again, it's too easy. The game is risk on, meaning you can expect the price of certain assets to go higher and others to lag behind. That's just how cash moves through the markets. All right, that's the key. You all know that. Now, with that, with this risk-on environment, with the stock market, banks, crypto, what do you think is going to happen here? Did you think, honestly, really, that the markets were going to drop on Trump's selection here? Did you really believe that commodities would go higher? No. There's no way you could have assumed that unless you really don't know how market dynamics work. Now, I want to cover some of that real quick. Basically, what this is going to come down to is this. We already understand that we have a market, which isn't even a market. It's so far detached from any kind of reality that is just even difficult for me to get my head around. But it doesn't matter. We're going to ride the wave. We're going to be cautious. And that's really what I want to talk about here. Again, look, the game is what it is. The 1 and 2 percenters, investors, traders, crypto enthusiasts here, in no way could they have wished or prayed for a better environment than what we have now. With Trump behind the resolute desk over here, this is a gift. a gift to, again, the rich, the money changers, the banks, all of this. I mean, come on, man. It also means that certain asset classes are going to underperform. And this goes back to all the questions I've gotten. Greg, I didn't expect this to happen. Could you outline why we're seeing pressure on commodities? I did speak about this yesterday. So please watch the video that I did yesterday where I did Markets and Look Ahead. We discussed all this, but I want to cover more specifically. There are six dynamics that are in play, and I sent this out to you yesterday in my newsletter. People, if you don't subscribe to my newsletter, you're missing out on a lot of information, and I would be willing to bet if you did, you wouldn't be asking some of the questions that I got yesterday and all through this morning in my inbox. So let's cover this real quick. My job, my sole purpose really for being here is to pretty much expose the dark underbelly of what this environment we're in is, okay? And allow you, and of course myself, to get ourselves in the right spots because we're being wiped out. We're being destroyed. The mechanism of price action distortions, the economic disaster area that we're in right now is not going to improve. I know you guys and girls were promised a lot of things, but what MAGA is going to prove to be is the best thing that has ever happened probably in the history of economics and finance to the rich, the money changers, the banks, the crypto space, obviously. And this comes at a price. You can't have your cake and eat it too. I don't know another way to put it. Get your head around it. Stop with the political nonsense here. It's too simple to see what's going on here. And if you don't want to jump on this train here and allow the system to work for you, then what are you going to do? You're going to throw your hands up and surrender? I don't know what to tell you. But the world economy is a disaster area. The fact that the world economy is a disaster area should come as no surprise to you because you know the mechanism. The faster the economy is cratered, the higher the markets are going to go. That mechanism I've outlined for all of you, if I don't know how freaking long here, currency devaluation, artificially suppressed rates are economic destroyers. They are not economic boosters. And what were we promised by Trump and Kamala during the entire campaign? Lower rates. I promise you lower rates. I promise you lower rates. Sounds good on paper, doesn't it? It's an economic wrecking ball. But you didn't see it. You were told to look over here. These people's fault why the economy is crumbling has nothing to do with it. It was all to keep your eyes off of the root cause of the problem. Artificially suppressed rates, currency devaluation, and the Federal Reserve, who will benefit greatly moving forward. All the thoughts that you may have in your head to the contrary will be proven to be absolutely wrong, just like they were last time. So wake the freak up, okay? If I'm here to wake you up. This is your wake-up call. Now let's cover these dynamics, and I want to outline the dangers here, because there is dangers behind every one of these things. Number one, I said, expect the current stock market multiples expansion cycle to accelerate. What does that mean? People, the market today is trading on multiples which we've never seen before. In other words, we have the biggest, fattest stock market bubble of all time. And that mechanism, obviously, since after the selection, has gotten monumentally worse. This morning, too. We are going to expect new records at the open. This mechanism means the market has become even more detached from reality, and it's going to wipe us out when it collapses. Debt market meltdown, oh, we're heading towards it even faster now. So understand, as I just said, what you're witnessing here in the stock market with regard to this multiples expansion, people, it's a no-brainer here. We're already in a nightmare scenario with regard to the world stock markets, world leaders as puppets working for their central banks, Trump included. I know you may think the opposite, but mark my words, save the video. See what's going to happen to global debt deficits here in the United States as well. It is not going to stop. It's going to accelerate. And what does that do? It makes the Federal Reserve stronger. Are we on the same page? Logically, or are you still just brain warped into some other kind of distorted truth? It's not. This is the truth, what I'm telling you. So, what I said here is this mechanism is going to be responsible for inflating a much bigger and fatter stock market hyper bubble. Are we on the same page? That's number one. Number two, we know for a fact that we are going to see less regulation on the money changers, the banks. The banks are going, again, look, this is a consolidation of power. Deregulating the banks here is going to allow them to take big risk. Big risk. What happened during Trump's last tenure? He historically rolled back bank regulations that were put in place to prevent more public bailouts. That's going to happen to a greater degree moving forward. We're going to bail the system out again. Count on it. So, there is the risk here. You can expect consolidation of power with the mega banks here. Smaller institutions, they're going down. And their assets are going to be purchased for pennies on the dollar as the mega institutions here benefit from the Trump selection here. It's a no-brainer. Have you seen what's going on here with regard to the banks, the mega banks here? I already made a couple of suggestions to you. If you're interested in looking at the mega banks, I sent a whole newsletter out. I did videos about it. I'm not going to talk about it again. So, with that said, you got to understand what's being set up here. Why do you think banks are being deregulated? Why do you think? I mean, look, if you are a Republican or feel like you are, you're all for this. It's all about deregulation, and that bleeds off into cryptocurrencies as well. We have another issue here. And you know this. You know what I'm going to say, but I'm going to tell you again. Okay. Trump was the man to be selected here for the markets because he's a proponent of negative rates. What do we know last time? That's what he was calling for. Call the Fed boneheads. You all know that. The potential here for negative rates looms large. There's no doubt about it. And even if we don't get negative rates, or if we get, look, the Fed's going to continue to lower rates moving forward, which means a loss of purchasing power. How is that going to help you? It doesn't, quite honestly, but it will help Wall Street. It will help the 1% and 2%ers. They are closer to the money. The Fed creates more cash out of nothing. The Cantillon effect, look it up. They benefit. Banks are going to benefit. Period. It's too simple. So there's the risk as well. So let's move forward here. That was number 3. Number 4. People, let me explain this to you. I understand you guys and girls were promised a lot. Unfortunately, this is how it's going to turn out. And I want you to do something about it. All right? And that means take advantage of the gift you've been given here. You're going to exceed, not just here in the United States, but around the world, a lower standard of living for the middle class. And I wrote this here, whether you like it or not. This is what's going to happen. Get your head around it. All MAGA will turn out to be is a continued mechanism as to push wealth right up the food chain, the 1% and 2%ers, faster. Again, people are still being sold the lie that by making the rich richer, you're going to benefit from it. Not going to happen here. I'm sorry, people. It's not working out so far, and it's not going to work out moving forward. So unless you decide today to take action, and we're going to talk about that in a moment, you're going down with the ship. You're going down with the Titanic, and the world economy is the Titanic. World leaders are driving us into that mechanism here. So anyway, that's number 4. Number 5, people. This here has got to be the biggest no-brainer in the history of the world. Global debt and deficits, including that here in the United States, is going to skyrocket. I want you to think about the numbers I'm going to say. U.S. debt to GDP ratio 122%. Worldwide 333%. These numbers are irrecoverable. They're not meant to be recovered from. As global debt surges higher, what are you noticing? Stock markets are going higher. This mechanism is going to be pushed and shoved deeper up every single orifice that you have, just so you know. It's not going to stop. So what are you going to do about it? Well, we're going to talk about that. Now, this is where this whole thing comes to a climax. Understanding, this is number 6, it's sick. Cash seeks yield. Here's the key. Here's the freaking key. And I wrote this specifically by MAGAizing the stock markets or the markets in general. This is how it's going to play out. Are you ready? Are you ready for it? Okay. We're going to look at what's going to benefit and what is going to also benefit depending on your perspective here, but at a slower pace. You're seeing it right now. Stocks, the stock market trading on multiples we've never seen before. You're going to see the money changers or the banks do much better moving forward. Deregulation should be a no-brainer to you. The crypto markets are going to outperform as well. Okay, are we on the same page yet? I hope so. Now, this is where there seems to be a concern, and this is what I want to address more specifically here. So this means that, of course, risk on, cash making its way into the stock market, creating a much bigger, fatter, uglier bubble. Banks, abso-freaking-lutely here. They're going to take more risk, potentially more profit, but as regulations are rolled back, you are going to be made responsible for the mistakes that they made. Okay? Just be ready for it here. Whether it's bail-ins, bail-outs, it's being set up, and you're going to pay for it. The middle class always pays for everything. You understand that? Always. The mechanism is not going to change. So there's a danger for you. Now, people, understanding that the stock markets, money changers, banks, and crypto is where cash is going to seek yield. That means other asset classes are going to underperform. Here they are. These are going, I'm not saying that they're not going to go higher. Obviously, we've been seeing a lot of pressure here. Gold, silver, crude oil. They're probably going to put on gains, but they're going to be muted. They're going to be muted. In other words, they're going to be more on sale as debt is vastly inflated, as cash is pushed into risk assets and cryptocurrencies. And look, man, you guys and girls better get with the program. We now have the king of the crypto markets. This guy could, look, I'm a big crypto enthusiast. You all know that. I own a bunch of cryptocurrencies. Bitcoin, my favorite of them all. Why? Because Trump kept pushing it. Bitcoin president, Bitcoin president, Bitcoin president, Bitcoin president. It's going much higher, people. You have been given an opportunity here. I've been telling you this since 17,000, since Bitcoin 17,500. When I came out here and I said buy it, we're now over 82,000. What is it going to take to wake up some of you people here? It's astonishing to me. I don't understand it. I understand. Some of this is pretty clear to me. A lot of you who don't like Bitcoin is because Trump hated it. Now he loves it. So why are you still locked into the old Trump? The new Trump loves Bitcoin. People, wake up. Crypto. He's promised us to make it a part of the strategic reserves. Let me ask you again. I didn't get any answers about this, maybe a couple. Would you have rather have seen, instead of adding cryptocurrency to the U.S. strategic reserves, the United States has a gold strategic reserves. Yes, we do. It's supposedly at Fort Knox. Why is it during the entire campaign neither Kamala nor the illustrious Trump said a word about adding gold to the U.S. strategic reserves? You didn't hear that at all. Why? Because it would be counter to the Federal Reserve's plan to take us over. And we got the guy for that too. People, you better wake up, man. You better wake up to the situation. If you're not awake yet, you're really done. There's nothing else that I can tell you. It's too easy. It's too simple. I've laid this all out for you. Again, these six things they're happening now, and they're going to happen more so moving forward. So there's pros and cons to each of these things. People, what this means is we are being set up for the biggest crash of all time. The biggest wealth transfer of all time. And where do you think the wealth transfer is going? To you? You really think that the wealth transfer is going to you? No, it's going right up the food chain to the 1 and 2 percenters. Stolen legally right from you. That's where we're going. Wake up and take advantage of it, people, right freaking now. I'm going to ride with all of you, okay, through all of this. There is no way I am going to lose here, which means there is no way you are going to lose. You understand? People, I got you. I got your back. Stop with the nonsense. Stop with the Fed's going to be over because of Trump. The same thing we heard last time, and the Fed became the most powerful organization in the history of the world under Trump. We're supposed to pay off the debt in 2 years because of tariffs. Remember that? Didn't play out too well. Bank deregulation. Can you see it now? Rah, 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 the stock market every day. Now it's cryptocurrency. If you can't see that this is opportunity for you, then you lost. Also, gold and silver, realizing gold, silver, commodities across the board are going to underperform here. That means that's a gift as well to buy these assets at massively suppressed prices. People, come on. Do you get it? That's my question before I end this video. Do you finally see what's happening? Do you finally understand why Trump was selected here? Or do you still not see that either? Are you that blind? I have to know. All right, look, we're going to get out of here before I get out of control. I love all you guys so much, and I mean that with all I got. And I'll never let you down. But you got to allow yourself. Put all the nonsense aside. Whoever you were brain warped into, believing this and it was these people's fault. No finger pointing at the Federal Reserve. That should tell you it was the fault of these people. It was the fault of this, the fault of Biden, the fault of whoever. Not one syllable about how it is the Fed's fault. The Fed is responsible for monetary policy. Therefore, they're the ones responsible for inflation. It's not Biden's fault or anyone else's fault. It's the Fed's fault. Period. They're the ones. And this mechanism, people, is going to continue. So it's time to wake the freak up. Love all of you from the heart. Let me know where you stand on this. Are you finally seeing the light here? We're going to lead to an epic crash, worse than you can imagine, on the back of the distortions that are occurring right now. That's what's leading up to here. Nothing has changed. Nothing at all has ever changed since you and I have been together. So have you been with me for over 10 freaking years? Things have just gotten more dramatic, more disproportionate. I don't know. You know what I'm talking about. But again, we got this. Let them play their games. We're going to play ours. And we're better at it because we have the freaking playbook. People, I will see all of you later, 4 or 5 p.m. Eastern for the live stream, okay? I got you. I got you.